So today's Cardinal lesson, we're talking about long-term care today. We're talking about how long-term care and long-term care insurance positions itself within the context of the financial planning that we do. I mean, most of the people coming to us are in their 60s, some in their 50s, some in their early 70s, but for the most part, they're in their 60s. And they're looking at all seven things, or they're coming to us about one thing, and it's not usually long-term care. Um, they come to us, we do a financial plan, and our financial plans include all the seven worries. So, what we're going to be talking about today is taking long term care insurance and showing how it fits in with these other seven things that we talk about on a weekly basis. So, with long term care, what we're specifically talking about is where you have difficulty or you need help with two of the six ADLs, activities of daily living, which are bathing, dressing, eating, transfer, continence, toileting, or you have a significant cognitive impairment that compromises your ability to get through a daily routine. So we're going to go through and talk about the technical implications of all seven worries. But before we do that, I want to bring Tom on, and why are we doing this video on long-term care today, Tom?
Yeah, I mean, we're doing this video because of everything that we deal with, all the stuff we plan around. This is the one that touches everything, right? If this happens to you, if you need some type of long-term care event happens where you get sick, it touches your whole life. It touches your family's life, and it impacts everything we've done thus far. And so we really just want to illustrate that today. We want to point that out and really hope that you take this seriously because this is a serious the consequences of this are serious and you need to plan for it. So let me bring up the show notes. You can find these below the link below this video. They're also on our website at cardinalguide.com. We have the board, and again, we'll get into that as we go along. They're pretty sparse today. Mostly what we've done, and we'll get to this in the tax section of the board, is we've put in the actual code in the IRS code of how the taxation on long-term care benefits are paid out, right? You essentially get these benefits tax-free. It's written in the code, the IRS tax code, and that really helps write the policies. It's sort of this generates how the policies are written in terms of qualifying for benefits. We'll talk more about that a little bit later. But if you actually want to read through the code, don't read through the whole thing. But if you want to read through this section, we have it here in the show notes. So I'll turn it back to Hans, and we'll just start going here.
Yeah. And so what we've been talking around saying there's almost zero demand for long-term care insurance. People do not call us up and say, hey, I've been watching your videos. I want to hear about that long-term care insurance. Or people coming in and want to buy a policy. We say almost zero. There's some exceptions to this. So when we have people come into us for financial planning, they generally are coming into us, they want to talk about Medicare. They want to talk about tax planning and ways to lower their taxes. They want to talk about income planning. So, how can I spend my money in retirement and not run out? There's high demand for these different pieces of planning. We have seven worries. The point I'm trying to make to you about is when we're sitting down with you the first time, this is what we want to talk about, really for your own good. And so, if we want to get into the why of the video today, I'd like you to just take a few minutes to listen to what we have to say with an open mind and to take the matter of long-term care and preparing for a long-term care event. I'd like you to take it seriously and open up to the possibility that this might happen to you. If it happened to everybody, they couldn't offer insurance. I mean, you couldn't offer fire insurance if 100% of the house is burned down, or even if 3/4 of the house is burned down. So this is an outlier event. It's a long, expensive, long-term care stay, and so I'm going to state right up front that I'd like you to take this seriously, and we're going to be positioning long-term care insurance, long-term care planning within the context of what we put in a financial plan for people. Now, I said this earlier, is long-term care is defined, is right in the tax code, is that a long-term care insurance policy is going to pay benefits to you providing you have one of two things. You either have difficulty where you need human assistance performing 2 of the 6 activities of daily living that are right in the tax code, or you have a severe cognitive impairment. So it's one of the two. It doesn't have to be both. And the 2 of the 6 that we generally, when somebody's in a claim and they're claiming on these policies and we're consulting with them, the 2 easiest or clear things to prove are bathing and dressing. And especially on home health care claims where people need help with those 2 things. I need help getting dressed, I need help taking a bath. Now, some of these others are just so anyhow, to get a claim going, you need 2 of the 6. I don't want to dig too deep into that. And, when we go over a couple of other Medicare issues, a couple of the other worries, like Medicare pays very little for long-term care and the type of long-term care that we're talking about. What they do pay for is for skilled care and it's visits if it's at home, and it's acute care. You got something seriously wrong with you and serious sickness and you need treatment from a skilled practitioner. That's not what we're talking about here. What we're talking about here is you've become compromised in your ability to get through a daily routine. That's what's happened to you. Now, if this compromise is only happening for a little while and maybe your spouse or your children can help you out a little bit, that isn't going to create this gigantic crisis in your life. It's going to create some problems if you need help for a few weeks or a month or 2. What we're talking about here is when something like this is permanent and it's going to go on for years, and the expense of it is going to go on. When we talk in terms of income, is if you've planned out a retirement income and you're living off a combination of your Social Security check and taking money out of your 401k or IRA, or perhaps you've purchased an annuity to kick out a lifetime income, and you have other sources of income and you're just getting along just fine, all of a sudden add to that 10 grand a month, 8 grand a month, 6 grand a month of new expense that's going to go on every month. That's what we have to do, a major reallocation of cash flow. And so, in terms of estate planning, when we talk about this, is that we put in the tax code that we have these hybrid life long-term care policies now, where you're buying a life insurance policy that is really designed for long-term care. But if you don't use it or don't use it much for long-term care, it's going to pay off the life insurance benefit to your heirs. So it's effectively, you're guaranteed that you or your estate is going to get something out of this thing, one way or the other. And we've put the tax code that is actually out of the Pension Protection Act that was created back in 2006. And then the insurance companies have made these products, which we can offer to you. And then specifically, the biggest problem with the estate, when a lot of the money's been spent on long-term care and it's been spent down, is the surviving spouse. So I want to get on to the gist of the video. At the center of this thing, we have you. And you might only be in your 60s now, so we're talking about the you 20 years from now, who's just had an event or some type of health problem or cognitive problem that all of a sudden it's now we're going to need to bring in care either into your home or we're going to need to move you to an assisted living. It's going to have a high expense. Who's going to bear the brunt of this is your family. And so I had intended for this circle with you in the middle to be much larger, but we stuffed too much on the board. So I want to bring Tom on, and I want Tom to just talk a little bit about all of these subjects.
Yeah, I think some of the things, and if you've watched our channel, I've been through an event personally. Like I got sick when I was in my 20s, and my wife was taking care of our 8-month-old child and me. Right, I was in a wheelchair; I couldn't walk, and it was eye opening of what that did to her, to our family. And I don't think people realize how much of a burden that puts on them. The other person who's taking care of you, they have to put their life on hold, right? A lot of times this plays out as a child kind of, pulling back from work. Maybe they have to go to part-time. Maybe they have to retire early, right? I mean, there's all sorts of things that can happen, really, because now their main focus is trying to take care of mom or dad because we didn't have a plan in place. And your kids will do that. I mean, what choice will they have if there is no plan there? I mean, of course they're going to take care of you if they have to. The real question becomes, is that a burden you want to put on them? I think it's really telling that, Hans had mentioned there's almost zero demand for this product, which was true, right? We don't have a line out the door, people coming in wanting to buy this. The exception to that is someone who's been through it with their family. They've seen their mom and dad. They were the caregiver of mom and dad, and they said there is no way I'm putting my kids through what I just had to go through. So I'm going to buy a policy to protect them. Right? It's less for you. I mean, the care is for you, but it's really to prevent your family from having to do that. Because when this happens, I mean, the first point that we have in the middle of this page here, that every financial discussion, every decision that had been made up till that point gets set aside, and the main focus is on long-term care. And that's not how you want to approach this, right? So you want to do this thinking ahead of time. You want to do it in advance of needing it. Once you get sick, it's too late. You can't buy insurance at that point, or you need to buy it while you're still able to. Because that's the other area where there's a demand for it is I can't tell you the number of calls we've gotten from generally a child calling us up, say, hey, mom or dad just got this diagnosis. The hospital's asking if they have any insurance because we're trying to figure out where to put them. Can we buy insurance? And we have to sit there and talk through it with them. And essentially the answer is no, right? You cannot buy insurance right before it's needed because that's not how insurance works. And so you need to buy it before you need it with the preparation that you might need it. Homeowners insurance is a great example, right? You buy homeowners insurance hoping you never need to file a claim. If you're filing a claim on your homeowner's insurance, something has gone wrong, right? There's been some incident, there's been a fire, there's been a flood, whatever it might be. And now we're having to file a claim. Same thing with long-term care insurance. You need to buy it before you need it. And you kind of hope you never need it. And that, again, that's why that hybrid policy that we talk about, or one of the hybrid policies we talk about, is useful, right? That type of policy is there's still a benefit coming back to your heirs if you never need care. But in the meantime, you've had this protection set aside really to protect, if you were to need care, that they're not having to set their lives on hold. They're not having to figure out the money aspect of it, and they can just focus on the care that mom or dad is getting. So again, it's serious. It impacts everything. And if you don't have a plan, you really need to think through that. And then one other final point, I'll turn it back to Hans. When you really boil it down to it, the reason people don't buy the policy is they don't think it's going to happen to them. And if they're being truly honest with them, we gave them some truth serum, and we got down to the real core of why they're not interested in this is they don't think it's going to happen. Because if you knew this was going to happen, if you had a crystal ball and you knew you were going to need some level of care, you would buy as much insurance as you possibly could, really to get the best care you needed. And so really, I want you to really sit down, be honest with yourself. Like, there is a chance this could happen. And if so, we need to have a plan in place for that possibility.
So what we're talking about here is, again, it's a compromise in your ability to do a daily routine. And if you're 65 or 62 or 58 or 73 and you're looking at this, I'm not talking about you tomorrow. I'm talking about you, the you of 10 years from now, the you of 15, 20 years from now. And people spend too much time, in my opinion, trying to guess and speculate whether this is going to happen to them or not, or they're going to die quickly and never have to use long-term care. There's all kinds of things. And we also have people that say, oh, I've looked at this before, it's too expensive. And what I would say to them is that price is only an objection in the absence of value. They're seeing that as, sure, the cost is high. And if they really understood the possibility and the probability of this happening to them, and then how much it's going to cost them and what it's going to do to their family, that the price wouldn't necessarily look as large and as undoable to them. So what I really want to focus on now is your family, because they're the ones that bear the brunt of this stuff. Is if a long-term care event happens to you in the future, you're going to get the care you need. especially if you have some resources, if you have an IRA, you have some money in the bank, you have income that's coming in, it's going to get worked out. You're going to get the care that you need, or your family's going to step in and do a lot of the care because they can't afford to hire it from the outside. What I want to talk about is what are the consequences to your family? And, I borrowed this from a friend of mine, is it's going to create serious, if not irreversible, consequences to your family. A long-term care event, if that happens, there's going to be serious, if not irreversible, consequences to your family. Taking care of the chronically ill makes healthy caregivers chronically ill. So we saw this with Gene Hackman, and who's now deceased, and his wife, who was much younger than him, but she was still a senior like the rest of us. And nobody knows exactly what happened, but he had severe dementia or Alzheimer's or cognitive impairment and has had that for years. And she was taking care of him by herself. And there was obviously nobody coming in as home health care workers taking care of them. And it wasn't the money that stopped them from hiring home health care workers. I mean, it just wasn't. I mean, there's no telling how many millions of dollars that couple had, but yet she was the one taking care of him, and she died, and he lived on. They were guessing for about 6, 7 days. You can imagine that. She was his caregiver, and there's an example of a healthy caregiver in the beginning became an unhealthy caregiver, and she became sick herself, and then she died. Being his caregiver, nobody was checking on him. So um, tell me what choice your kids will have when they get the call. So if you're relying on your kids by default, if you're 85 and your spouse is 85 and one of you needs care all of a sudden, or you're living alone, and your kids gets a call. I mean, the answer, again, I borrowed this from one of my friends that's in long-term care, a professional, is, what choice are your kids going to have other than take the call, or one of your kids is going to come to your rescue? And uh, what I want to make point is that many people, when they buy this insurance, they want to make sure our children never have to put their lives aside. I mean, we're in that phase right now where both of our kids are either married or getting married, and they're buying houses. And my older son is creating my grandchildren, and we're helping them out a lot. And these are very busy people, they're professional people, both husband and wife, or wife to be, and they have jobs and careers, and they're taking care of kids. And, they very much need the money that we're providing to them to help them out and buying their houses and all that kind of stuff. Imagine throwing the need to care for mom and dad right in the middle of all that mix. It just doesn't work. We have long-term care insurance, and sure, they're still going to be involved if one or both of us get sick. It's just the insurance is going to pay the bill for the heavy lifting, and the people that are coming in every day are going to be paid for by the insurance company. And then when there is no plan, your loved ones become the plan. I mean, that's just what ends up happening, is if people haven't planned for this, then your loved ones become the plan and they solve the problem. So I want to bring Tom back on, and I want, just in summary, for Tom to give some added points here.
Yeah, I mean, I think these are all great points. I mean, on a personal note, like, I mean, the speaking to the caregiver gets sick. Like when I went through my health issues, this was back in 2018. I was sick. My wife was taking care of me. She ended up getting sick because of the stress, because of her not taking care of herself, not getting the rest she needed. She ended up being sick. Right now, luckily, it wasn't as bad as the Gene Hackman case, obviously. But I mean, it's just it happens. It happens all the time, and we see this. And the other area that I see a lot happen, I'm dealing this right now with my brother-in-law, and his mom. She is sick. He has two other brothers. Him and his wife are the ones really taking care of uh, his mom. I don't think I'm related to her in any way, but his mom is, they're having to take the burden. The other two brothers really are not stepping up to do it, right? And this happens all the time, where one of the children steps up and takes on the burden of it, which is a heavy burden to bear. and the other ones don't, and it builds resentment between the family. It causes issue. Then eventually, someone dies, and then money gets involved, and people are questioning how you're spending the money because it's going towards that. It's not going towards the estate. I mean, it gets ugly really quickly, and that is the last thing that we rewind the years. 10 years ago, that's the last thing you would ever want to put on the kids, but that's what happens, right? I mean, you have loved ones that are dealing with stressful situations, dealing with a financial burden, right, that costs a lot of money to provide the care, and it just gets messy, and sometimes it breaks up families that it's never repaired. And the question then is, do you really want to put that on your family? And I know the answer is no. Obviously, you don't want to do that, but that's what happens without a plan. And I could go through so many examples where we see it day in and day out. So we really want you to think through this, have a plan in place, even if it's not insurance, right? At least having a written plan that's communicated with all the kids. Here's what needs to happen if I get sick. Here's the money we use. Here's where I want to be. Is it at home? Is it in a facility? I mean, having those discussions now prior to the crisis happening, it makes it so much more, runs more smoothly when it happens. It's not going to be easy, right? When this happens, this is awful. Even if you have the insurance, but if we can take off some of the burden of it and ease it some, so clearly that's a much better path to go.
Okay. And what I'm going to say, just in finishing here, is think about, at a minimum, buying short-term care insurance. It's going to give you 1 year, 360 days. It's not quite a full year of benefits, a couple $100 a day of home health care insurance, or 1 year in a facility, which is 12 months, of getting $6,000 a month, $8,000 a month. It's certainly not going to take care of you for 3 or 4 years, but it is going to be wonderful to have a pot of money from an insurance company to at least put the problem on ice for a year. So that would be something I'd consider. The second thing I'd consider is, how about taking some of your IRA money and using it to purchase an insurance policy, just in a lump, that you just transfer a piece of your IRA money from where it is into an IRA at the insurance company that's designed to pay for a long-term care policy. That's as technical as I'll go. Or just think about buying insurance for the whole thing. And if you got health problems, we have solutions for that as well. So we've gone over all of the 7 things. We've talked about the Social Security. We talked about Medicare. The whole show's been on long-term care. We talked about IRAs. We talked about what this does to your income and your monthly income if a crisis hits you. We talked about the effect on the state. And we didn't talk a lot about taxes, but that's where we get brought in, is when somebody doesn't have insurance and they got to start paying for it out of their assets. And it's usually their kids bringing us in. There's a tax efficient way to do that. We can help you with that. So this is our business. I want to bring Tom back on. I'm Hans Scheil.
And I'm Tom Griffith.
And we thank you very much for listening.
Thank you.